I now hand the conference over to Mr. Abhishek Murarka from IIFL Securities Limited. Thank you, and over to you, sir.
Thank you, Rajya. Good morning, everyone, and thanks for joining the call. On the call, we have the entire management team led by Mr. Ramesh Iyer, Vice Chairman and Managing Director, Mr. Vivek Karve, the CFO of the company and Group Financial Services Sector, Mr. Rajneesh Agarwal, Executive VP Operations, Mr. Dinesh Prajapati, Head Accounts, Treasury and Corporate Affairs, and Mr. Rajesh Vasudevan, Senior VP Accounts. We thank the management for providing us the opportunity to host the call, and I now hand it over to Mr. Iyer, who will make his opening comments, and then we'll open up for Q&A. Over to you, sir. Thank you so much.
Good morning, everyone, and thank you for joining this call. Let's begin from where we left when we had a call in July, where we said that we do see buoyancy in the rural market, and the sentiments are turning positive. Rural was little better insulated from the COVID situation as compared to the urban market, and our branches were opening up and were able to move on the marketplace, meet consumers. Consumers were visiting branches, dealerships, etc. And we continue to say so, and we continue to maintain that position. Definitely, while we are hearing that the COVID has entered some of the rural market, but again, to be more clearer, they are in the real urban centers of the rural market, not gone as deeper into the villages and things like that. And therefore, our people are able to go on the street, meet customers, are able to go to dealerships, and the thing seems to be much more normal than what we see in the urban centers. So far as the demand for vehicles is concerned, we believe that the demand is still high. The consumers are visiting dealerships, the footfall is definitely high, and the OEMs have not been able to fulfill the demand because of their own supply constraints, and there have been shortages of vehicles. But as we speak now for the festival season, definitely the OEMs have stepped up their supply position, and inventories have gone up. The demand is definitely picking up, and the retail deliveries are happening. And we do believe that the two festivals, that is Dussehra, Diwali put together, by number should more or less be equal to what we saw the last festival, that is last October, November, Diwali, the pre-COVID festival. There could be some volume increase in certain brands, but overall my belief is that the numbers would possibly be similar to what we saw then. The sentiments continue to remain positive, and the monsoons are definitely a great add-on to that. We had a good crop gone by where the cash flows did show substantial improvement. The farm cash flows did pick up well. Even the current monsoons are definitely a good sign of a good future. I think the water levels have gone up, and not just it will support this crop, but I think going into the next crop, this will be of a great help and support. We do believe that the yields will be high, and our own understanding is the government will also look at a decent support price, which should help the overall farm cash flow to be better as we move into the season. Similarly, we also think the infrastructure is opening up, though not very aggressively, but yes, in different states we do see mining opening up. We are able to see some coal auctions happening, road projects commencing to happen, and that adds to a good positivity to the rural market. And we definitely have been the beneficiary of these cash flows, and that is reflected in our overall collections during this period. If you recall, we had talked about the moratorium being offered to consumers was very high at about 75+%, and we did see collections coming from those consumers. And we're happy to report that 70% of the consumers who have taken moratorium have serviced their loan. But just as a clarification, not that all of them have paid all installments between April and August. Some of them have paid maybe 2 installments, 3 installments, or different installments, but definitely we've seen movement in those accounts during this period. As we entered the moratorium in August, definitely even in September, we saw the collection efficiencies hold up, and we have seen collections from all these, many of these customers during this period. There are certain segments which continue to remain under pressure, and we believe they will take longer to bounce back, and we have talked about it even in our earlier calls. And to remind back, those segments are the taxi aggregator segment, the school bus segment, the heavy commercial goods carrier, trailers, container movers, as well as the vehicles which are attached to hotels and tourism centers. These four segments clearly we see are under pressure and possibly will remain so for a couple of months more. At least the school bus operations would start to commence only in the next academic year. So far as the aggregators are concerned, we do hear and believe that with airports opening up and some of the offices opening up, etc., these vehicles have started registering some revenue, though not at the earlier level. Again, commercial vehicles, slow movement in terms of goods carrying is concerned. It could take another 2 quarters before we can say that they are back to some kind of normalcy. The tourism center vehicles are redeploying their vehicles for alternate use wherever they can, and therefore there is a pressure on their revenue. And those are the segments which have not been able to service their loans during this period. And these are the consumers who may come up for even restructuring when we look at restructuring for these customers. But as of September, we have not done any restructuring. Even as we speak to you today, we have still not commenced any restructuring. We first engaging with the consumers, understanding their requirement. Based on their needs is what we will consider restructuring for customers, but we don't expect more than about 1,50,000 consumers who may ask for restructuring from our overall total base of about 20 lakh customers that we are servicing currently. We also think that the restructuring that will be asked for by these consumers are not something that they are asking for 2 years of repayment extension, etc., etc. Very interestingly, when we went across different states and understand what the customers' needs are, some of them are just wanting that they be allowed to service the interest for the next 3 months or so, and then they can restart paying the installment. Some of them are saying we can start paying immediately, but bring down our size of the installment. Some of them are saying give us another 2 or 3 months time, and from January is what we will start to repay. And some of them are saying that overall extend our contract by 3 to 6 months and bring down the installment all through the period. Some of them are saying just reduce the installment for 6 months to 1 year, then on go back to the normal EMI size. Good news arising out of all of this is that there will be no major impact or deterioration to the collateral, because the period of the contract is not substantially getting extended, while during the tenure of the contract, the installments are getting restated. These are our understanding after meeting the customers. As I said, not yet any restructuring done. But once we embark on that journey, we don't believe more than 1,50,000 customers would come in for that. The second half for rural is always good, and you have seen our accounts historically. In the first half, if you have been able to manage with good recovery in spite of moratorium between April and August, we do think that we can see continuity of collections to remain buoyant, because the harvest would come in maybe little delay, especially with this untimely monsoons in Maharashtra, which would have impacted some crop. But good news, Maharashtra is very sugarcane dependent, and sugarcane has not been hugely impacted, though the harvest could get a little delayed and the sugar factories could start a little late. So therefore the cash flows may shift from October, November to maybe go to January types. But nevertheless, the money would come back, and we do think that we will be the beneficiary of the improved cash flow from the rural market in the next 6 months. I think in the same breath, we also believe that we don't therefore see any spike in the NPAs happening, but surely the 3 or 4 segments that I talked of, barring the contracts that will go in for restructuring, I think some of those contracts will show signs of non-payment, and which will lead to some increase in NPA, which is why the company continues to have its overlay continuing, and will make an aggressive stance of provisioning, and always try and keep the net NPA levels to be at around 4% or even below, based on how the whole thing pans out. But surely want to confirm that we don't see a spike of NPA going forward from here. From a growth perspective, I think we are definitely benefited by being there in the rural market, while the volumes are yet to pick up, but we don't see any loss of market share. We do maintain our market share or even gain in some of the markets, but we are cautious in terms of lending is concerned, given Bihar goes for election. So we've gone little slow in that market on how much to do, what to do. Similarly, on the tractor front, while we see demand for tractors, but mainly driven so far by farm tractors and not driven so much by infra. And once that opens up, then that volume will pick up. As otherwise, we are cautious when a contractor wants to buy a tractor. We are kind of taking a little cautious steps around that. Pre-owned vehicle demand has been good, but supply side again is choked because there are limited repossessions, no exchange program happening, so the supply side is not very aggressive. But I would think that post-festival, one would start seeing even that to begin to happen. But putting all of this together, do we see a substantial growth up to March in terms of disbursement? My answer would be no. It will be a cautious growth. But definitely, we would see quarter-on-quarter improvement, though it may not meet or show growth over the previous year numbers. Maybe some months may show like October, November because of festival, the numbers may look similar or slight growth. But on an overall basis, having lost the first 6 months with low volumes, as we close the year, we would possibly definitely see not a growth over previous year. But October to March, if you were to cut off and see, there could be some flattish approach rather than a degrowth this time. That is as far as the overall disbursement growth. I think given that situation, I think the AUM growth will be range bound between 8-10% kind of a situation, because not too many contracts would also mature while a marginal asset addition does happen. But to get back to a 15, 20, 25% kind of a growth story, I think it will all go post-March once we start seeing things to settle down better and starts to improve. Our focus on cost rationalization continues, and we are very, very focused on each line item, and I explained about this even last time. While there are benefits because of the variability of the business volumes, etc., due to COVID, but removing that apart, like maybe some traveling expense and some kind of people cost could be because of such variability. But even otherwise, on very, very basic fundamental line item like the security services, BPO services, advertising expenses, legal expenses, all of this has been revisited, and rent for our branches, all of this have been revisited, and we do believe that whatever savings that we have got are sustainable. But yes, today the cost would have to the asset would have come to sub 2% level. But as it picks up, the market picks up, the volumes begin to happen, etc. And if you start growing at 20-25%, maybe this 2% will also go up to 225, 240 basis points, which is what I've always said, that from a 3% will first come down to 2.5% before we can really go to a 2% level. But definite savings on the cost front has been a very focused approach of ours. So far as the margins are concerned, I think the yields are holding up. We don't need to really drop rates, and the product mix yields are definitely better with increased tractor numbers and pre-owned vehicle numbers. But we have resorted to storing liquidity, and therefore the carrying cost is something which builds pressure on our margin. I think if I'm not wrong, Dinesh or somebody can clarify, but about 50-60 basis point pressure would come from holding large liquidity for any eventuality. Fortunately, things have changed for good. Sufficient liquidity availability. When we took this decision in April, it was very unclear, and therefore we did resort to storing. But now, as we speak, we do see ability to raise funds from every source at a very, very attractive price, and therefore we will now start relooking at how much we need to really as a buffer liquidity rather than storing large sums, and that could ease out, and the margins may start to show some improvement arising out of that in the next 6 months. So that will be in as far as the overall margin is concerned. As I said, we do believe the collections will hold up, and we do believe that the NPAs will not show spike, and we could see blunting of NPA, and maybe if the crop cash flow does come the way we predict, that is, the yields would be good and the support price would be good, we can even see improvement to this number as we reach March. So I think overall we think that things have gone well for us from every front, whether it is from some basic disbursement to ability to raise funds, to be able to maintain margin, to maintain collections and asset quality, as well as control cost. I think in every stage of a line item that we looked at, what we need to do seems to have gone well for us. On this parallel side, we are investing adequately in our digital initiative and the data-based approaches, and we are giving alternate solutions to consumers for their repayment. Not necessary that they need to come to the branch and pay. We have made arrangements for them at different pockets. On the branch expansion, you would have seen some contraction to our number. It's mainly coming from, again, rationalizing on our regional offices, not necessarily the branch office which are customer facing. So in every state we had more than 2 or 3 regional offices. We have consolidated them and we have created one service kind of an approach, and that has released some of the large regional offices which are not required, and we have redeployed the people across the country. I want to confirm to you that we have not reduced people in terms of the current situation in the number of count, but as I said last time, we are not adding people and we are redeploying them more meaningfully internally, and therefore you would see some number being flattish, and if people who are resigning in this period are not being replaced, so you would also see some reduction to the number that has happened and people being deployed better and more logically across. Specifically on various NPA fronts, our actions have been that we have identified NPAs by product, by region, by branch location, and by application of product, and a specific team of about 2,000 people being earmarked specifically to handle these contracts for the next 6 months. And we believe that that approach of ours, like in the past, would substantially bring down the NPA by better recovery from these consumers. As I said, they are resorting to settlements instead of repossessions, and therefore that would happen. But what can happen post-festival once things starts to improve? I think consumers who start to earn but are not able to service loans may either surrender or we may repossess vehicles and settle them off. So we would maintain that aggressive stand in as far as provisioning is concerned and liquidating NPAs is concerned and bringing down the overall NPA levels. We are working hard to bring down the NPA at least by another percentage point of gross and take the net NPA levels to sub 4%. And we believe that all actions that we take and the support of the market that we see from cash flow should enable us to reach those levels. So I would kind of stop there. I think I've covered on all the fronts. Just few lines on our subsidiary companies. Rural housing, again, I've always believed that's our growth engine. We have started seeing improvement there. Even they have started taking some aggressive stand on provisioning. And Maharashtra has been one market where they have had higher pressure points, but some improvements in Maharashtra also have already been registered. And we think that book will be a correcting book. They are cautious on their lending. They have in fact not lent during this period. They are focusing on corrections. And I would believe that as we close March, you would see good correction to the overall NPA numbers there, and sufficient provisioning would be made to bring down the net. And then only they will commence their disbursement for that business. As far as insurance broking, again, it's a very synergetically related business to the business volumes of Mahindra Finance and rural housing, etc. And therefore, their growth has been very range-bound on the basis of what's been the growth of M&MFin. But they remain profitable given that they are only an intermediary and they don't really need capital, but they are efficiently operating the business model to remain profitable. Asset management company, again, given what's happening in the marketplace, their growth has been very, very kind of muted and steady, but they have also been able to curtail their cost and bring down their losses. Very marginal, 2-3 crores kind of a situation. They are not overly putting pressure on us. And as you know, we got in a partner and therefore there is no need really to infuse more capital into that market. So this is about all that's happening out there. We do believe that while things are still not normal, while we think there is a lot of pressure at the marketplace, we do still think that consumers are a little confused over what to do now versus wait for little into future, etc. But when we compare with what we saw between April to June and what we saw between July to September and what we see now, we are seeing a remarkable improvement on quarter basis. And we do think that things are looking more positive, sentiments have turned positive. I think confidence of people, whether it's employee or consumers, have sufficiently gone up for them to be able to take that necessary risk and come out to the market and transact. So I'll stop there and then open it up for questions. Thank you so much once again for joining on this call.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Maruk Adajanania from Elara Capital. Please go ahead.
Yeah, hi. I had a question on collection efficiency. So could you quantify the collection efficiency for September and also quantify the number of borrowers who have not paid a single installment?
Okay, before I answer the question, can I ask you a question? How do you always win to be the first question raiser?
So it's a trick.
I see. Okay. Okay. On the exact collection efficiency, Dinesh or Rajesh may want to answer, but I would think it is very close to about 80%, 77%, 80% or so for September specific, if I'm not wrong. Dinesh, any?
82%. 82%, sir.
82%. Okay. So that is so far as the collection efficiency for September is concerned. As far as the number of accounts which have not been able to pay any EMI who are taken moratorium, I think is about maybe 2.5 to 2.75 lakh customer out of the 16 lakhs customers.
Sorry, so it's 82% for September, is it?
Yes.
Is that right? Yeah.
Yes.
Okay, and 2.75 lakh customers of 16 lakh have not paid a single installment.
That's right. And as I explained right at the beginning in the commentary, most of them would be in the segment of, taxi aggregator will be about 50,000-60,000 of them. The school bus operations would be some number, maybe commercial vehicles, the tourist operators. So some of them will come up for restructuring, I would think, out of this bunch of customers only.
Okay, sir, thank you. And sir, just one more question. As per RBI requirements, you have given the table on the overdue accounts. So I just wanted to know how that ties in with your collection efficiency. So your overdue AUM was around 90 billion as of February, right? The outstanding balance as on September for the February overdue is around 90 billion. So how does that tie into the collection efficiency?
Rajesh, you were explaining something in the pre-call. Is that the same thing? 9,000?
Yeah.
1,000. Can you just explain?
See, this 90 billion, what you are telling is the exposure as of September for all cases which had any kind of overdue as of 29th Feb. Hello?
Yes.
And the next line are those cases where we have continued a benefit, of asset classification. So there are cases. I had these all cases not paid anything. Everything would have ideally moved to asset classification change. But here there is a collection. So the value for which the asset classification benefit is limited to only 4,000 crores from the 9,000. So there are recovery in these cases during the moratorium also.
Okay, sir.
And hardly anything has moved to NPA. Very small number has moved to NPA.
Okay. Thank you, sir.
Thank you. The next question is from the line of Shanti Patel from SK Investments. Please go ahead.
Good morning, sir. Hello. Good morning, sir. I just wanted to know the overall increase in our loan portfolio in Q2 as compared to last year's Q2. Secondly, how much increase in the two-wheeler loans in terms of percentage in Q2 as compared to Q2 of last year, and similarly for tractors.
Vishal or somebody's got a ready number, Q2 to Q2 on tractors.
We'll collect that data and share with some time.
Okay. But two-wheeler he asked, right? Two-wheeler we don't do. I think you asked two-wheeler. Is that right?
Two-wheelers and tractors. Both.
So tractor they will share with you, but two-wheeler we don't do at all. So we don't have any major portfolio on two-wheeler.
Okay. So far as tractor is concerned, what is the increase in the percentage?
Yeah. I think in another couple of minutes they'll just pull out the data and share it.
So should I come back then later on, or you will answer?
Yeah. Yeah, or if you can leave your number, somebody can write across, message you also. Just state your mobile number. Somebody will note down and message you probably.
I will just speak out my mobile number.
Yeah.
So can I?
Yeah,
989
989
248
248
5457.
5457. Vishal, you have noted down, right?
Yeah, I noted it.
Okay.
Sir, I had asked you the overall increase in loan in Q2 as compared to Q2 last year. Overall increase.
I think the 12% increase was what, half year is it?
So if you will see from the business assets has increased from 66,058 crores to 67,732 crores.
Right.
So just message in the tractor growth quarter over.
Yeah.
Okay.
Fine. So I will be waiting for your message, right?
Yeah, he will message you. Vishal will message you.
Hello.
Thank you.
Hello. Thank you. Thank you, madam.
The next question is from the line of Amit Ganatra from HDFC Asset Management. Please go ahead.
Yeah, good morning, sir. Just one question. How to, view this 4,000 crores number that has been disclosed as per that table? Now, does this become a pot which potentially can either be restructured or, can become NPA in the upcoming quarters? How to view this number of 4,000 crores?
No, so this 4,000 will have combination of everything, right? Some of them, as I said, in those segment of about a lakh customer, if they want out of the 16 lakh customer, if they ask for restructuring based on their ability to repay, some portion may go to restructuring. Some may actually repay. Why will everything go to NPA? So some of them will repay, and some of them don't take restructuring but are not able to service the loan. Maybe will move into NPA before they can start paying in the fourth quarter. So this 4,000 possibly will have combination of all. It's not any one particular action around the 4,000. Rajesh, is that right?
Yeah. It will be in different stages also, because here we are taking February and you are seeing as of September, 7 months. So not necessarily that they would be at the edge. So you might be able to collect also.
That's right. So they will have in all three categories. So the picture will become even more clearer in December because the moratorium has ended. And if they don't take restructuring, we will know how many of them are paying between October and December. And our belief is at least all those customers who are farm cash flow dependent, like tractors and the local pickup vehicle and all that, we would see collections on all of them happening, which is why even the moratorium was taken by 16 lakh customer, restructuring is coming down to as low as 1 lakh plus customer. So you would see a lot of collections happening around this between this and the next quarter.
Okay. And generally, when you said that September was 80% collection efficiency, typically what is the normal collection efficiency for you during, average during months?
I think if we take a very good period of, normally July, August also because of monsoon, the collections are not very high. So maybe another 4-5% it would have been better on a very normal condition.
So 85-86% is your normal collection efficiency otherwise?
We are 82, maybe 87, 88. Yeah.
Okay. So that is right now the gap between what a normal year for you would look like and what the current year is tracking for you.
That's right.
Got it. Okay. Thank you.
Because it's also the 0.6% also comes from, in September normally we would repossess a vehicle, they will come and settle and take back the vehicle. They will settle against it. So we have not resorted to any of those measures. Whatever we have collected on an absolute pure collection to collection basis, I won't see the gap would be too much. But if you were to do various other actions to improve the overall collection, we would not be able to do those actions in September.
Got it. Thank you.
Thank you. The next question is from the line of Jiten Doshi from M&MFin. Please go ahead.
Ramesh, congratulations. I think the results were good in the given environment. I just want to ask you on what is the competitive landscape looking like, and where do you see your average cost of funds probably in the next year, and how are you looking at the next year panning out? I mean, there is a lot of things which have structurally changed. So if you just give us some sort of a color, this is a COVID year, so I'm sure that, asking you much about this year when things are not in your control is not fair. But in a normal, steady state environment, how are you looking at things in the next year? And, what's the competitive landscape and the environment?
Yeah. So as far as competitive landscape is concerned, I think what we see, new players like, people who were more inclined to heavy commercial vehicle business or loan against property business are currently stuck not doing too much of business around that. So they are possibly looking at a tractor as one of the options possible. And therefore, we do see that in the non-Mahindra range of tractor dealerships, we do see more financials crowding up there. And you have seen some finance companies putting up their numbers have gone up and all that. Barring that, we are not seeing too much from NBFC space in all these spaces. But I think banks like State Bank, etc., are getting aggressive in the car segment to get some more volumes by giving long-term loan like 7-year loan, 9-year loan, low-rate loan. But the good news is that the banks anyway go to one set of customers that's not necessarily an NBFC space of customers. But I must admit that if we were speaking 1 year back, did we see the same aggression from some of the NBFCs in tractor? Did we see the same aggression from some of the banks in the car business? I would say no. Is this permanent? I'm not able to predict, because once their prime business recommences, will they continue to do this product if anybody does? Because these businesses, especially tractor, requires a very unique and special skill sets and willingness to run through the cycle, and it's not a normal kind of a car lending business equivalent. So, but definitely we do see one or two NBFC. No NBFC on an all-India basis, but definitely NBFC on a regional basis. The increase that we are seeing. But no sooner volumes pick up, these competitions also will become little irrelevant, because everybody would have sufficient volume. So far as the cost of funds are concerned, our belief is that possibly it is at its best now. We don't think that one should predict or forecast any further reduction in cost going forward. But at least for next 6 months, we don't see increase either. So I think given that we have resourced money on a little long-term basis, locked them well, the current cost would be something will do good for us for at least next 6 months to 1 year. After I finish, maybe Dinesh wants to or Vivek wants to add something to this, they can. But I don't think we are predicting a reduction of cost going from here. So for us, what do we see, let's say 1 year from today? So up to March will be a different situation. Let's talk 21-22. How does it look like? I very strongly think that the government focus to improve the overall infra spend will be very, very high, given they will also move into the election year 2 years from now or 3 years from now, whenever the election is. But they will move into that speed, and you will see a lot of government spend going towards rural, which will absorb a lot of these assets, whether it is pickup, whether it is tractor infra, whether it is tippers, excavation units like backhoe loaders. I think that segment will definitely get buoyant. I have said this before, and I will want to repeat, which is, if you see 2010 to 2014, when both farm cash flow and the infra cash flow did well, I think the rural cash flow the rural growth was phenomenal. And given that the monsoons have been so good, the water levels are so good, even the next crop, that is, the next harvest will also be extremely good, according to me, even if the monsoons were to be delayed next year. So the farm cash flow and government spent on infra, the two cash flows, will definitely drive the rural buoyancy. And I think that's what we are preparing ourselves to, whether in terms of deeper penetration, in terms of partnership. With this new announcement that RBI made about we can partner with banks and do co-lending, etc. We have already been approached by some very, very large banks, nationalized banks, to see how we can partner them. And we do see that as an opportunity. If we can zero down on dealerships and say the two of us together corner all business in rural for some of these major dealerships, can be a new approach, new strategy. So I think we are very buoyant of how things look between post-March 21 leading up to 22-23, and which is where our readiness in terms of branch readiness, people readiness, digital investments, technology change, process orientation, training of people. That is where we are focusing on, and we know what we are doing now is sufficient and good to sail through this situation. Focus on collection, don't over focus on business growth, but ensure don't lose market share and maintain relationship, but then get into the future which starts post-March. That's what I would kind of wrap up.
Sure. That was an excellent summary. Thank you so much. Wish you all the best, Ramesh.
Thank you.
Thank you.
Thank you. The next question is from the line of Aditya Jain from Citigroup. Please go ahead.
Good morning. Could you tell us the size of the stage 2 loans as of September end?
Rajesh or Vishal, anybody has the number immediately? Should be there.
7.7%.
Okay, and there is no standstill or any classification thing to know here?
Standstill, as per Supreme Court, what is that 335 crore is part of the 7.7%.
Got it. So there is a 50 basis point inflation of this due to the standstill.
Yes.
So it will take stage 3 and stage 2 together, all of that will come to the same number.
Understood. Right. And the 4 segments that you talked about which are under stress, in terms of percentage of AUM, how large would they be?
Sorry, I missed you in between.
The 4 segments, the taxi aggregator and so on.
Yeah.
In terms of percentage of AUM, how large would they be?
Commercial vehicle will be 4%. Taxi would be another 1.5%, so 5.5%. I think about 7-8%, if I'm not wrong. Should be around that 7-8%. Because within the overall commercial vehicle, heavy commercial vehicle will be about 4%. Taxi would be 1.5%, about 80,000 cases. The tourist, I think, should be 7-8% maximum.
Got it. Thank you. Just last thing, the growth guidance of 8 to 10%, is that for FY21?
Yeah, we are at 12%, I think, half year, and we don't see the asset that we would lend to and the contract that would mature should more or less nullify itself. So I think that's why I said 8 to 10% up to March.
Okay. Thank you.
Thank you. The next question is from the line of Parshil Shah from CapGuru Capital. Please go ahead.
Yeah, I had a question regarding your costs. So currently in the first half, we are seeing a 2% overhead as percentage of assets, which is I think one of the lowest that we have seen in the company. I understand that some of this would be, because of lack of business, and a lot of it may come back in the future when we are looking at growth again. But just wanted to get a sense of what is the sustainability of this low cost scenario, and how much of it will come back, how much of it will not come back in the future.
So as I said, right at the beginning in the commentary, that some of the costs like traveling, employee incentive, dealer incentive, these are variable to business growth. So let's say if business was to grow at 15-20%, etc., to that extent this variable cost will also go up. What we have done well to bring down overall cost is to revisit other fixed ones like the branding expenses, legal expenses, BPO expenses, branch rent, right, all of that, and some of the variables also having reclassified in terms of the pricing. So I would think that if the business was to grow at 15, 20, 25% type story, the 2% may look like 2.40. The balance is a decent correction.
Sorry, I missed you for a bit over there. Could you just repeat that?
I'm saying if the business was to go back to a growth of 20-25%,
yeah,
one would see the overheads going from 2 to 2.4 type level, which was 3% earlier, which looks 2 now, will go back to 2.4.
Okay.
So what we have really effectively permanently saved, I would think, is a 50 basis point. arising from those various heads.
Okay, thank you so much. And one last thing, actually, sorry. So in your presentation, you also said there is excess liquidity, which is actually affecting your gross spread. So how much would that be? Like just a ballpark figure?
No, so exact number Dinesh can say. I think it's about 50 to 60 basis point out of some 7,000-8,000 crore that we carry as excess liquidity. On a phased manner, we will bring it down maybe from 8,000. We'll first bring it down to 5 to 6,000 and then go gradually to 4,000 maybe. So maybe another 25 basis point saving surely is possible around that space. Dinesh, is that right?
Yeah, we are carrying more than 8,500 crore as of 30th September liquid investment pool. So as Shaiya guided, we are in process of bringing down this liquidity pool based on our strategy.
Okay, thank you so much.
Thank you. The next question is from the line of Subrat Dwivedi from SBI Life. Please go ahead.
Good morning, sir, and thanks for taking my question. First, on the collection efficiency front, you mentioned that it is 82% now, and it is 5% more than that on a normal course of business. So September 2019 collection efficiency would be around 87-88% on an overall basis.
We can exactly check, but I guess it will be around that for September.
And within that, segment-wise, are there any variations, any more color you can give?
I think normally we don't have too much of product variation in the past. We normally have geography variations only. Like, South would do little less than West and Central or North. And that variation continues even in this time, except that, the 3 or 4 segments that I talked of has added to the variability in terms of lower collection. That is the taxi aggregator segment, the school bus segment. This was not in the past. In the past, we always used to have geography variations only.
Understood. You also gave a number of 1 to 1.5 lakh accounts out of 16 lakh accounts which could come for potentially restructuring. In terms of value, where do you see this number as a percentage of AUM?
Of this 1.5 lakh customer. Sandeep, you have the number? You have worked out, no? 1.5 lakh customer, what the value looks like?
It's around 6,000 crores.
6,000 crores. Okay.
On research.
Okay. So, when you say that the LTV will not be impacted even if there is a restructuring, so how will this restructuring be done?
No, so here is I think it's important to understand what the customers are asking for is one of the following. Okay. Some of them are saying we just need additional 2 months or 3 months. That means from January we will start to repay. Right. So what typically happens is it's like a moratorium, right? October to December we won't have any installment for them, and then the entire balance outstanding or future receivable will be divided by the balance of the contract period with additional interest that is chargeable and EMI worked out for them. So that's one set of customers are asking. The other set of customers are saying, please reduce our EMI size for next 6 months and take us back to the current EMI size post 6 months. Right? So therefore, whatever short payment that happens in this 6 months will get added to the future outstanding, and then EMI will slightly go up for the balance period of their loan. Right? So I want to be extremely clear that we are not giving them any additional money during restructuring to any customer. No additional money is being provided. No additional funds are being given. It is the same outstanding that is due from them and future due from them is being given an additional time, either by giving a moratorium or by reducing the EMI size, right? Or extending the contractual period. Instead of 24 months expiry, it may expire in the 30 months period.
Okay. And any...
interrupt Mr. Subrat Dwivedi, may we request you to return to the question queue for follow-up questions, as
Sure.
there are several participants waiting for their turn.
Okay, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to one per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. The next question is from the line of Kunal Shah from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. Firstly, in terms of the collateral value and once we repossess, do we see the risk of higher LGDs? Maybe currently we are not very aggressive in terms of repossession and holding up and handholding them. But otherwise, going forward, when we do it, do we see a higher LGDs out there?
Higher losses, is that what you're asking?
Yeah. So higher losses on the amount that we repossess or the GNPs that we have. Yeah.
No, see, I think we should understand the loss is on account of two or three things, right? One, if the asset is misused and not maintained, you lose some value. Or if the asset is repossessed but not sold for long, then it loses value, right? Or if the asset is, the model changes and the resale price dips, then you lose money. We don't lose money when an asset is not being put to use, and when they commence to put to use, or if they surrender on that day. Will we lose value? We may not. There is one positivity in this whole thing, which is when the vehicles are moved from BS4 to BS6. If all the vehicles that we would repossess would be BS4, my personal opinion is that they will all have a decent demand because they will earn the same revenue that a BS6 vehicle earns, and whereas BS6 vehicle will be priced higher. So there will be a large set of consumers who may look for a BS4 vehicle on a second-hand market, which they can put to use commercially and earn better money. Now, that is one possibility, not tested, or I'm not making a statement of an absolute fact that has happened, but definitely that is one clear possibility. As otherwise, we don't see, and also we shouldn't forget that these are customers who are not general defaulters. They are customers who have repaid 10 months, 12 months, 8 months, even some of them 15 months plus. So why will they not want the vehicle to be retained or at least settled at a better price? Because their equity in the business is higher now. Having paid so much installment plus upfront, they have invested 20-25%. So I would very strongly think if we repossess customers who have serviced the loan well, they would have maintained the vehicle well, they would have repaid certain amount plus margin initial. So we don't think the losses should go up. If any, the recovery, the resale price should hold up to an extent that we can even see the average recovery is better than what we would have normally got from a defaulting customer. Normally we lose money where we have done a wrong lending and then we have to immediately repossess and try and sell, or where the customer has misused the product and not paying us. We don't lose money in good customer cases. And we are talking of good customers who are not able to service the loan because of circumstances. So they will not be misused products.
Sure. And secondly, in terms of write-offs, so what would be the outstanding 100% write-off amount, and is there any scope of recovery out there? And maybe what would be the policy in current circumstances? I think this quarter also it was largely write-off which led to GNPL coming down. And if we have to look at overall GNPL numbers, earlier also we were at 9-10. So are we saying that even like post-COVID, there could be some movement from stage 2 to GNPL, but we should be managed to what we had seen peak in the last 3-4 years?
Okay. And when you went out of that, I think 14 odd lakh customers, Sandeep, am I right? 14 odd lakh customers were provided or whatever.
Out of 60, we gave moratorium to 16.7 lakh customers.
16 point some number. Okay, fine.
Okay.
Sir, when you mentioned 2.5 lakh customers have not paid in the last 6 months, that that those are standard asset customers, or does it include your 1 lakh GNPL customers also?
No. We are talking of standard asset customers who took moratorium. See, when moratorium was given, we don't expect them to pay. I think the question was that in September, have they paid? So we said out of that, 2 lakh customers have not been able to service the loan even in September.
Okay. But sir, if your stress book is 7-8%, why is the collection efficiency still lagging at 82%? So
I didn't understand. Sorry?
Stressed book, the stress portfolio, which is taxis and school buses, etc., 7-8%. Why is the collection efficiency still lagging at 82%?
No. But don't forget that 7-8% is from that segment, right? But there will be others who are not suffering but not earning all their money every month. So they will also have one EMI outstanding and all that, right? See, everybody, if they were to pay their current demand on time, then where is COVID and where is the market problem?
Okay. So then in light of this, how should we think of credit for this year?
No, so as I said, right, we are entering the good phase of rural market. We definitely don't expect NPA to go up from where it is. Because what we have gone through is the worst 6 months of not only the COVID impact, but also rural market impact. Normally, if you look at our book for last 25 years, the first 6 months are always the toughest period for us, right? Now with the harvest money that will start to come in, the infra money will come in, the settlements, project settlements will happen. We don't see the credit cost substantially go up. And I said those 3-4 segments which are suffering, if we give them a restructuring, then that adds to the benefit of they not moving up.
Understood. Okay. That's all from my end. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, due to the time constraint, that was the last question. I now hand the conference over to the management for closing comments.
Hello? The management is IFL, right? Not us. Okay.
Sure. So just on behalf of everyone, thanks for joining the call, and thank you, Mr. Iyer and team, for giving us the opportunity to host this call. Thanks and have a great day.
Yeah, and somebody who couldn't ask a question, maybe they can post it to Dinesh, Vishal or someone and we'll make sure that they get answered. Okay?
Yeah, I will speak here.
Okay.
Sure. Thanks, sir. Thank you.
Thank you.
Thank you. Thanks a lot.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.